Good morning, traders and investors. Are you guys ready for the #1 pre-market prep show? I'm your host, Money Mitch. I'm excited about today's show. We got a great show for you guys. Topics are solar tariffs, Chinese stocks, DIDI, Amazon gets a stock split, Apple's WWDC, and of course, we'll take a look at some of the earning and the ratings out there in the market. Stay tuned. Right here, your #1 pre-market prep show. Hit the like button and let us know what is your top watch stock of the day. And of course, rise and shine. It's time to start the day right here on pre-market prep.
Coming to you live from downtown Detroit, this is Benzinga's Premarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders. Let's go ahead. Let's bring on Joe Elconin and jump right into the futures action. It's a new era. Let's go ahead. Let's take a quick look into the futures. Let's bring up those charts. Joe, what are we seeing on out there in the stock futures?
Nice bounce off that Friday close. We're back. We're up 45 and a handles, 41.52 and a half. Good levels on the upside and the downside. Crude got over 120, new high of the move, giving some back, up 17 cents at 119.04. Gold moseying its way up to 1900, up 750 at 1857.70. Silver up 50 cents, 22.40. Bitcoin, little trading range here. It feels like 29.5 to 32, up 1960 at 31.495. And Ethereum futures, they're going the same way. They're up $165 at 1,911. So starting the week out on a good note, just about everything.
Yeah, it's pretty much an everything rally this morning. I was just looking at my scanner. I got top 1,000 stocks, and the ones filter the S&P scanner. There's only 1, 2, 3, 4. I only see like 12 stocks trading down. So that's, solid for the markets, obviously. This is, and then one thing to consider in these scanners is sometimes you'll say, oh, this stock's trading down. Like you can look at Caterpillar right now. Oh, it's trading down $1, but that's not the case. It's actually bid up. My scanner will just look at bids and offers. So if it's bid up, it won't hit the scanner. CNBC scanner would say, oh, Caterpillar's down $1, but it was just somebody, from an earlier trade this morning that was just off. So it's actually bid up Caterpillar 224. It's not actually trading down $1. It's actually bid up $1.10. So that's one thing about your scanners. If you're looking at them off the last, Interactive Brokers is one that looks at the last. It's not as effective as if it's looking at bids and offers. All my scanners look at bids and offers. Gives you a feel for where the stock really is, and you get those. It doesn't affect those outlier FINRA prints then either.
Well, let's start it off. It's a brand new era, and yes, I know the chat is going to be missing Spencer. We'll do our best to go ahead, and I'll do my best to fill in here. It's a new show, new era, guys. I'm going to do my best to bring you guys the value. You guys in the chat, let me know how we're doing and continue the feedback. That's what it's all about. Let's talk a little bit about the week ahead and what do we got looking forward. CPI data on Friday, a lot of talk of inflation. I mean, if you look around, there's been talks from just about all the major banks, kind of putting some warning signs on out there. We also got talks over the weekend. We got Wall Street's top executives making their rounds on the financial conferences. JP Morgan's Chase Jamie Dimon said the hurricane is right out there. Also, Goldman Sachs President John Waldron, who called the overlapping shocks of the system unprecedented. There's just a lot of talk of worry of recession down the line. What are you guys seeing this week?
Oh, whatever Musk tweets.
Musk controls the market.
Yeah.
It's Elon Musk market.
Yeah,
and everybody
whatever
else
he
is just
tweets.
Playing in his market.
Yeah. That's
Obviously, the email last week with Tesla, people asking why is Tesla trading up? Well, he's basically tweeted out this morning that the opposite of the email, because the email was saying that they're going to freeze hiring and potentially cut some staff. He's saying that's not the case. So obviously the leaked email he's tweeting out to defend the stock and defend the company, and Tesla's trading up $20 on that. It was trading up higher this morning, though. Tesla's leaking here a little bit, but still up 2.58%. It's a nice gap up for Tesla. It's a nice gap up for tech today, really, Joel. I mean, it's not just the Tesla market. This is obviously the tech market here, at least this morning. That's what's leading. That's what's driving. Obviously, we've got the Amazon post split as well. That's up $2.24 here this morning. So showing nice strength after splitting. I look at Amazon, doesn't even look right, seeing it at $124, but that is the case. So interesting markets here today, led by tech.
I like that. I like that. You know why? Because I'm just like, boom, right now I just look at that. I look at the cleaner chart and I mentioned it to Mitch, and it's like the levels just they jump up and hit you side to head. So
the volume, it's going to be one of your volume leaders every day now, because you think about, the volume, and obviously 20 times less. So it's good for Wall Street. I mean, a lot more shares traded on Amazon now going forward. It's already traded 2.7 million shares. Now it's not going to be like that every morning because this is post split and everybody's really excited, but it's going to trade a lot more stock now with its price 1/20th of what it was.
Well, we were going to talk about it a little bit later, but why not? Let's just get into Amazon. I'm pretty sure it's going to be on a lot of people's radars today. And one of the things is, I mean, we've been talking about, when is Amazon going to do a stock split for what? Years and years, and now we finally get it. Is this the opportunity for retail to get, really start getting their feet wet in Amazon?
Well, the opportunity was 6-7 days ago when the stock obviously could not catch a bid, and then 7 days prior to the split, it's been going up pretty much nonstop. From a quantitative perspective, stocks tend to be strong pre-split, tend to be weak post-split. I don't know if Amazon's going to fall into that case. It's such a loved name. There is going to be some excitement. There already is excitement here this morning, trading up 1.83%. But if we're just looking on a pure quantitative perspective, it's actually not the play to buy these things post-split. So again, Amazon's its own animal. So all we can do is look obviously at his history, and I know just from history that they tend to be weak, but in this case with Amazon, it's harder to say. I would just say I'd keep an eye on the adjusted. You got obviously adjust your charts, but hopefully they're adjusted. 125.61 was a high from 2 days ago. Let's keep an eye on that number, see if that high holds. But everybody's excited this morning. It's already up $2.
Yeah, we'll keep on watch. I'll definitely be watching it out the gates. I think it'll be going with a lot of tech today. We'll see what happens there. But let's go into this morning. A lot of focus is on what is on solar stocks today, guys. Reason why is 24-month tariff exemption on solar modules manufactured in Cambodia, Malaysia, and Thailand and Vietnam. President Biden announcing this, and also the Defense Production Act also being put into play here, meaning to accelerate American manufacturing across the solar supply chain. And this really comes after an industry-wide uncertainty unfolded with the DLC, the Department of Commerce, on March 28th announced that it would act on a petition filed by California-based solar module manufacturer Accent Solar, requesting that the DLC review solar panels imports from China companies working in Cambodia and Malaysia, Thailand, and Vietnam. So this came right after that.
The May 12th low, ARC low, the May 12th low in growth was also the May 12th low in solar. So many names that morning. Remember, I tweeted it out that morning, 10 minutes after it was happening. It felt like capitulation, a lot of these names. It absolutely was hindsight capital 2020, but that was the low for all these growth names, at least the low in the last 3 weeks. And they've had a nonstop bid, and we can talk about how resilient ARKK has been as the S&P was starting to try to leak and actually made a new low on the move. ARKK did not. That new low obviously being on May 20th. But if you go and you look at the solar stocks, they have been more resilient than even the ARKK. I mean, SEDG, which is a big part of TAN. I always think the big two guns, Solar Edge and Enphase, ENPH. That's two of the biggest components in TAN. They've been just on a tear, Joel. I mean, SEDG was 207 a month ago. It's now 316. So you're talking about a stock that's up 55% in the last 4 weeks. It's a hell of a move.
Yeah, big move in both those stocks. I'll just look at, just to cover it broadly, and I'll look at TAN and trading up just almost hit 79. And what you got? The question is you going to go up to go up to 80 here? That was your high in April. Exact high was a little bit above that, but I think that could be not only for today's session. I actually had two highs in that area: 79.71 and 80.52. That's what I'm looking at in 10.
The other consideration here is a big level. You're giving a great level there, Joel. Is that where a lot of stocks have, are still significantly down from their March highs. These solar stocks are going to approach these March highs this morning. So I think you get this, news here, which is good news. I think it could actually be a selling opportunity as opposed to a buying opportunity, just because they've run so far. I mean, obviously, this is the market where buy the dip hasn't been rewarded as much, but it absolutely was rewarded in these solar stocks because you got all the losses back from April and May. And what stocks can we say that about? That we're back up to the March highs. There's not a lot of stocks. So I like the relative strength, but with that being said, I mean, TAN's from 55 to 80 in a month. I mean, this is now the definition of chasing, a hard chase too, with the gap up. It almost feels like a little bit of upside capitulation this morning. So exact opposite of May the 12th. So I think if I was long some of these solar stocks as trades,
Big runs.
I think I would ring the register this morning.
Yeah, definitely. Big runs, not only for the U.S. Solar stocks, but also for the Chinese solar stocks. So,
Yeah.
just have to, always pick a level, pre-market level, see if you get follow through it, and pick a good daily level.
Yeah, I was taking a look at JKS also for that Chinese play, but it
That's what I
also
was.
just already started moving a significant amount, about
Wow,
30% in the
yeah.
last month. So what Dennis is saying, I could see also. This could be very much kind of a buy the rumor into the news, and now that we're getting some more news into it, I think you could see a little bit of a pullback. But one thing to mention, this is a 24-month tariff exemption. So in the long term, I think this is going to help solar kind of get that uplift. It just might take a little while to
I
show
still
back
like
up.
solar long term too. It's just you had the opportunity in May, and
Yeah.
now it's you're chasing stocks that are up 50% in a month. This has not been the market to do that. Maybe this is going to be the exception to the rule. Maybe solar is going to lead the charge. Maybe we're going to get back to all-time highs. I mean, if there's any sector that's actually looking for the potential to do that, it is solar. But with that being said, I think I would wait for pullbacks on all these stocks. The only one I own still SunPower, which I haven't looked at for a while. It's $20 this morning, so it's come off the lows too. I mean, it was $12, so you're talking about a stock that's up 60% in a month. Hard to chase now, man. Chasing just hasn't worked.
Yep, that is true. That's definitely true. Now let's go towards where a lot of eyes will be also today. And it doesn't necessarily need to be particularly into this one stock, but DD Global up 50%, guys. So definitely, if you guys didn't see that, it's jumping from the Wall Street Journal reporting that Chinese regulators would let them add new users again as early as this week. Chinese regulators are wrapping up their investigation on the ride-hauling giant DIDI. And pretty much signaling here that the country's crackdown on kind of this tech sect could be coming to an end. And you're seeing plenty of Chinese stocks up today, and a lot of this based on this sympathy.
Yeah, China's having a great day. Sorry, Joel. China's having a great day. DD up 62% on this headline. Are they delisting this thing still, though? They talked about delisting this. And I'm not sure. I don't follow it. Once the stock goes under $4 or $5, I'm not really into trading it anymore. And I know a lot of people like the penny stocks. They're like, man, where can you make 62%? But you know me, I like the bigger stocks, I like the more consistent. I don't like to come in a stock and see it down 30% the next day. So I tend to stay away from the stuff. So that's just my own personal preferences. But that's why I'm not following the story closely. But I do remember reading that they were going to delist this. And yes, the chat is confirming that it is going to get delisted. I never, ever buy a stock that is going to get delisted no matter what it looks like, because yes, you can still trade on the the other exchanges, but I mean, when it comes off the main exchange, the interest in the issue drops substantially, and it usually equals losses if you're buying. So if the stock is, and if the chat is correct, it is getting delisted, I'd still stay away.
Yeah, it's something definitely to be careful of. It's about up higher than 62% now, if you calculate that move from the bottom there. And this is going to definitely be moving, but it's not only moving DD, right? And we could take a look maybe how it's affecting the other Chinese stocks. Let's take a look at Baba. Let's take a look at JD. Those stocks are up this morning. And a lot of this, I feel, is based off of this outlook that maybe they're starting to actually let up on these stocks. What are you thinking out there?
Joel,
There's
what are you thinking on these?
oh man, this is what they're saying today. So you don't know what they're saying tomorrow, right?
Good to know.
Yep, they've already, there's been a reaction already, right? This is kind of old news. Just the DD strong, getting over $3 here. I don't know. I mean, just I see a lot of highs here between 3 and 350. So if it's going to stall in that area. So that's what I'm
I gotta
looking
think some
at.
shorts are getting squeezed in that too. I'm going
Yeah.
to look at the short interest because when
Yep.
stocks are getting delisted, the first thing I think a lot of people are probably short stock.
Yep.
So, again, I don't buy stocks for short squeezes, and the shorts usually end up being right. But this feels like an overshoot to me. It feels like a squeeze. Can squeezes continue? They can. It's hard to tell when these things stop. Let's take a look and just see. My kids are
31
going,
million too have
kids
traded.
are going
So
nuts in the background. I don't have much short interest on this.
yeah,
Uh,
31 mil. They're pressing it. I
Yeah.
mean, maybe see if you get lifted if you get lifted on stock at 350, and then there's a gap to fill up to 368. Baba looks a little interesting here as far as just like a longer term play. Just looking at the most recent pop that it had pop and then dropped, and now it's just kind of for this one kind of psychologically. I think if you hold over 100 for a couple days and build the base, take care of those lows around 103, 104. There's room on the upside. But I just like it that 50% right there is at 99. So let's see how long you can stay in triple digits 4 days last month in May, and then it puked. So see if you can hold 100.
Still, I'm staying away from China, but Alibaba, you gotta like that it's held up that
yeah.
$78, $80 solid down there. So I think eventually it does maybe start to get over $100. You're right, that level's the critical level for it there, Joel. But we've put in some work. At least we've stopped going down. I mean, it's just been an ugly year and a half for Alibaba. I know because I wrote it down on some of that. Obviously, got out of the last of my shares at 147, which was a major disappointment because I had it for 5 years, take it up to 300, sold half up at 230, and then rode the other half back to even. I was like, well, I'm not going to let the winner become a loser, and obviously scratched on the back half of it, which, Alibaba just became, and every Chinese stock became hugely out of favor. Does that eventually story turn? I mean, the big question still is like, what's happened with Taiwan? What's happening, in the macro political world with China? That's going to affect these stocks longer term. So it's an unknown for me. That's why as a trade, sure, but long term, I'm still staying away from all the Chinese names. Tough, man.
I mean, technically, I'm starting to like Baba now. At least technically, I see a couple bottoming actions there in the 85s and 80s, and I feel like that's a level you can start leaning on. I wouldn't see it wrong to kind of take that approach above 100 now to see if we get a nice swing up. I'm actually going to be looking at these. I have a feeling that we could get a little ride on up. There's some technically levels right there to
If
lean
you
on.
showed me this chart, Mitch, I can totally agree with you. If you showed me this chart and it wasn't a Chinese name, I think I'd be on board with you. But I'm just scared of the overnight risk in holding any Chinese stock.
Yeah.
All it takes,
It's
is to
difficult.
say anything, about the Taiwan situation or anything. There's so many other things too. A little more regulation. I mean, they've torpedoed their own stock so many times, and they don't care. So, I mean, this whole Baba started off with Chinese regulation. This wasn't even a company effects.
Yeah.
It's not like Alibaba, wasn't, executing. And a lot of this was just started from regulatory, Chinese regulatory. So that's why I totally agree with you. I think the technicals don't look bad, but I stay away just because it's a Chinese name.
Yeah, we'll see what happens. I'll be looking at these on live trading. We'll see if we get a live trade on these or not. Definitely keep watch on these names. A bunch of the Chinese names are moving also. It's not just Baba. You can look at JD,
Yeah.
PDD,
Yeah.
keep your eyes on all these. They're all showing a little bit of bottoming action, at least from what I'm seeing on technical levels. But definitely, I agree with that. Is you got to be careful about the overnight catalyst just coming and wiping the gains out. And we've seen it, right? I mean, a couple people played it near those gap down days and have written it up, but then, of course, getting fought right back down. So we'll see what happens with these Chinese stocks. Let's move on a little bit here. We can get into, let's talk a little bit about this Apple Developers Conference that's coming on up here. We can get into Apple here. So the WWDC is starting today. It's a full week, just to give a heads up. It's full week. It's not just one day. It's the Apple Worldwide Developers Conference. It kicks off today. There's going to be talks. There's rumors out there that they're going to give a little bit more information about their goggle that's supposed to be coming out in 2023 that would be released in the United States first. I think this is a big focus because they're going to be mentioning products a lot to do with AR apps and kind of this new focus in their app store that they're really trying to focus on, which is these newer developed apps, AR, VR apps. So you're going to see a lot of the platform talk being mentioned. I would be paying attention to see if there's anything actually solid given to us about the goggles or anything like that. I think that's going to be a big focus. But it's mainly focused towards the platforms and the programs that Apple's developing with their new OS.
You're getting a little bit of a pop, and I think just really keep a close eye on Friday's high for now. 147.87 Friday's high. You got the 148 in the pre-market. You're 80 cents off that. So I just, to me, it should be up more, right? It should be up above Friday's high and, perhaps working its way over to the 150 area. You got some people caught here. And I think that's the problem. You had that down day, big down day on Friday. So, goes bid 148, boom, keeps on going. Right now, you're 20 or 81 cents away from that. And then the focus for the week, the high for the week was 51.74, but the high close was on Thursday at 51.21. That's $4 away here. So relative strength, Apple's just not showing it to me today.
It's not showing it to me really overall here. And yeah, it's still kind of going with the cues. It kind of looks the same, but I mean, it kind of led the charge down on Friday. And I don't want to own the stocks that are leading the charge down on the down days and then kind of lagging on the up days. So
exactly.
I do own. I shouldn't say I don't want to own. I own Apple in the long-term portfolio. I bought it a decade ago, so I'm not selling my long-term shares. But a short-term trade here, it's not showing as much relative strength as some of these other big tech names. So I'm cautious on Apple. I'll just say that. And we know, I've been cautious on Apple for a while because I sold 1/4 of my long-term position up at 170. I kind of wish I would have sold the whole thing, but I just didn't want to realize all that tax. So I'm sitting here looking at the Apple. I'm thinking the stock's not cheap. Relative to itself, it's trading like 24 or it's trading 24, 25. Maybe it's 23 or 22 now because the stock's come down. But, it used to trade like 10, 12, 13 times earnings. So relative to itself, it's not cheap. You can't come in here and say, well, Apple's, all of a sudden it's off 175 to 145. I'm going to load up because the stock is not cheap relative to where it's traded to itself. And if we ever do go into an ugly correction, Apple's going to lead the charge down. So I'm cautious on Apple here.
And it just seems too is like it goes down more on bad news, right? When or supposed bad news, it comes, it gets hit pretty. Like that thing never had a chance on Friday. And then like a good and I know it's not directly Apple news today, but market news today. I mean it. I just the spoos are up, whatever. Spiders are up 1.03, so I guess it's up a little bit more than the market. But it just I don't know. You would be looking for a little bit bigger bang for the buck. And then the other thing too, the market has seemed to shrug off the Microsoft. Lower guidance. I don't know if that's waiting in the wings for Apple as well, but big tech, top components, Not the exact same industries, but I think that's something that has to be in the back of people's
Well, the
minds as well.
Microsoft obviously was FX headwinds, which is an okay thing, and I love the market's response to the Microsoft to shrug it off, because I was really concerned that day that this Microsoft, might spill over. But the resilience of the market, they started buying growth that day and they didn't stop, and then they dragged even Microsoft up with it. But I'm cautious too, and I actually sold my Microsoft. So I just sold it, my Microsoft position, because one, we've had a pretty good bounce off the lows. Two, it's not a stock that I bought decades ago. It's a stock that I bought during COVID, so I hadn't have a crazy gain in it. I've locked in my Microsoft. I kind of wanted to sell at 300. I watched the dang thing go all the way down to 246, and now it's had the nice bounce to 270. I'm kind of thinking, it's not quite to the 50% retracement, but it's kind of close. I like my waves and stuff like that. So, and I'm still looking at my overall exposure. I have piles of Qs and I have piles of tech. And I'm like, man, I own everyone. I own Amazon. And I own a little bit of Facebook through my kids' account. But, huge position still. I rebought my Amazon. Huge position still in Apple. Huge position. The Qs are my biggest thing in my long-term portfolio. And I'm looking at this and thinking, I got just so much exposure to Megatech. I'm like, do I really want? And the Microsoft's bounced nice $30 or $25 off the lows. So I've actually sold my Microsoft here now.
Taking a shot there to selling that Microsoft, but I can't blame you. Like you said, it's not like it's
not cheap though. These were cheap before, Mitch. And that's the whole thing. You can say, oh, well, yeah, it was 300, but now it's 270, so it's cheap. Well, no, Microsoft still trading 25 times earnings. That's just still, you get market multiple 17. Could this thing trade back down to 18 or 19 times if we're going to a recession? Yeah. And I still think we're going into a recession. So I'm still a net seller of stocks. Overall, I'm buying dips. I do buy some dips. And, I'm doing some rebalancing. I'm doing some other things. So, I've been so heavy mega. And it's not even my, it's just a matter of the mega caps, the mega cap tech in my long-term portfolio just kept going up so much that it dominates it now. When I look at my long-term portfolio, I'm like, it's like almost half mega tech cap, because that's the stuff that went up the most. So I don't want to sell my Apple because I'm up 500% in it. I sold a little piece, but it's all going to kind of move together. So I kind of picked on Microsoft because I was only up 70% in it, as opposed to some of these other ones, like my Qs, I can never sell them. I'm up, I think it's 1,200 or 1,300%. Because I bought them back after the financial. No, I bought them even before that. I bought them after the tech bubble burst. I'm stuck with that forever. So I'm like, so even through Qs, I probably own 6 or 7. What's Microsoft in the Qs, Joel? Actually, I think it's closer to 10, isn't it? It's a huge portion of the Qs. Maybe I'm wrong with that.
Yeah, I don't have that. I know it's the second biggest component
in the S&P, but I think in the Qs, how much is Microsoft? I can bring it up, but I mean, even indirectly, I own a lot of shares of Microsoft indirectly just because I own so many shares of Qs. But let's just go and look at the Qs. I think it's probably higher than 7%. Oh yeah, it's 10%.
10%, right?
It's 10% of the Qs.
Yeah, I knew it.
So I mean, I got my biggest position is Qs. Now I own Microsoft, Apple. I look at the biggest components of the Qs. So my long-term portfolio, biggest position the Qs. The second one's Apple direct, and then I own Apple and Microsoft indirectly from the Qs. So I just have too much exposure there. Yeah. So I kind of analyzed this from a portfolio perspective. It wasn't that I hate Microsoft, but the stock I feel like has had a good run. It's not cheap, and and it did warn. Even though they shrugged it off, it did warn.
They did warn, yeah.
So that, and Google is the other one. I don't own Tesla. We know I'll never own Tesla in the long-term portfolio. But the other 5, Apple's 12% of the Qs, Microsoft's 10, Amazon's 6, Google's 7. I own all 4 of those, direct and indirect. So I mean, that's why Microsoft.
A lot of exposure.
It
doesn't feel like if we're both in agreement about, we're ripping back to all-time highs, right? Nah, I don't think so. It's not going to happen so fast. Also, it just kind of feels, and when you pointed out with the ARC and stuff, this rally, we wanted to have a different complexion than just Microsoft, Apple, Google, Amazon, Tesla, right? We want other stocks to lead, and that's kind of what the charts are telling you too. For the throw out the high from last week, throw out the low from last week in Microsoft. I think if you're a longer term investor here, with digesting the news, digesting the market, the high close for the week came on Thursday. That was the day they came out with the warning. We are trading below it here. To me, if I was Dennis, had it but didn't sell it yet, I'd be like, man, can we improve on that 274.58 close? That would be big for me. And the market may have a good week, and that may not. So 274.58.
What's it going to take? I mean, that's where if you're buying Microsoft at these levels, you're basically banking on no
A rip in
recession,
market,
absolutely
yep.
no recession.
Yep.
But also you're banking that, they've got the huge gaming. They've got, you see what's happened to some of the gaming stocks. And yes, some of them have bounced back. But I mean, there's, Take-Two was $206. And it's, you look at our $210, 126. Yeah, it's had a nice bounce back off 100, but they've hammered some of these gaming stocks, and Microsoft's big there too. So it's lots of reasons, and you can still find the reasons to be bullish too. This isn't a bold call. It's just more of a rebalancing thing for me. So not a totally hate thing on Microsoft, but looking at it and saying it's not cheap to itself. Maybe I should just reduce some exposure. And if you are buying it here, you're banking that we're coming out of this, and going to be a soft landing. And I still don't see that happening.
The company just came out and gave you bad news, right? They just told you.
And they bounced it. And I'm like,
Yeah.
I feel like the bounce was a gift. That was my analysis of it to myself. I'm like, okay, I just watched my Microsoft fall significantly. And then it bounced that day. And when it bounced later that day, I was like, you know what? It bounced with the overall market. I'm like, I'm going to take the money that it just gave back to me because it was really ugly that morning. And I'm getting out of this. It's funny coincidence, Joel, because I had this analysis done a few days earlier. And I had written on my sheet to sell my Microsoft. And then it warned that morning. And I'm like, come on. I'm like, I was actually planning on selling my Microsoft, and then it warned and gapped down. And then I watched the thing V that day and come all the way back. I'm like, okay, well, it's giving me the second chance to get out. So using that opportunity to get out. I didn't get out the 275, which would have been nice. That's where it was trading to, prior to the warning, I believe, or 274 or something like that. And then obviously went all the way down to 261. But when it bounced back that morning with the overall market, I feel like it was more of an opportunity to sell as opposed to that, huge opportunity to buy.
That reminds me, and this was back in the Bright office.
Can you put Microsoft back on the charts there just because they were talking about it so much?
Okay, yeah. This is just a real quick story here. We were back at the Bright office investing, and I had this utility stock that I had a lot of different girls' money in, my money in, and it paid some crazy dividend, and then you could reinvest the dividends at like 5% below the market price, right? And I had just been building this thing for years and years and years, and it had some capital appreciation too. And this was right around like the Enron thing. And companies were getting associated like with the Enron. And I literally woke up one morning and I said, man, I hope this company doesn't have anything, any dealings with Enron. And I talked to the investment officer and I said, we're dumping this thing today. I go, it's a large position, girls' college funds and stuff. And Lisa's like, well, maybe let's wait on this one. And it closed at like 34. It opened up at like 32. I dumped the entire thing. And that stock ended up going down to like $3.
Oh, nice.
Yeah.
Which stock was it?
It was called Utilicor.
Utilicor.
Yeah, UCU. It was like a utility, and and that turned out. Dana and Emily went to college and did a couple other things with it, and it's when you have those premonitions, and then I'm like, oh man! And then the day that I wanted to sell it, they came out with the news. And how did we get news back then? What did we have? It wasn't Bridge. That's what we had at what did we have in the Bright office? Was it Pony Express or what was it?
Remember.
We used to get the news from. Yeah. But anyways, let's just go with your gut on stuff like that.
Sometimes you got to go with your gut. And I think most of the time, I think as a day trader, it's all gut instincts. As a longer term investor, you got to do a little bit of analysis, and sometimes your gut's wrong, but the first feeling is sometimes the right feeling. So especially if you're seasoned, I mean, you're a newer trader, you haven't just developed that gut instincts yet, but once you've been trading for a while, often your gut instinct is correct.
Confidence in yourself is very important as you develop.
It's everything.
and to having confidence in your strategies, and that's why you're really doing it. It's because the statistics back it up, right? Let's talk a little bit. You guys are already talking about it, and we can talk about it. I had written down here 22% returns for the largest U.S. companies by market cap. Just kind of do a little deep talk, and Apple's down about, let's say, 18% here. Microsoft down 19.7, Alphabet 20.9, Amazon 26.6. Tesla down 33.4, Meta down 43.3, and Nvidia down 36.4. That just kind of shows you what kind of market we're truly in, right?
Bear market.
These market caps, especially these big companies, showing bear markets, right? 20% usually talked about as a bear market, and you can see majority of those deep into the bear market.
Out of all of them, and I own almost all of those names, but I don't own Nvidia. I'm not going to own Tesla in the long-term portfolio ever, although I trade every day. If I didn't own it, I would own Google. I own it already. It's a huge position, long-term portfolio. I'm in from $250. I'm up like 1,000% in the thing. Never going to sell it. But if I didn't own it, with the split coming, in another month, I saw what's happening to Amazon on pullbacks, never on rallies. On pullbacks, that is one that I would add to my long-term portfolio if I didn't already have a huge position in it. So I'm sitting here looking at Amazon, what it did pre-split. As a trade, I would love a pullback in Google, maybe a 50% retracement of this recent move for whatever reason. You go 2,000 up to 2,300. If you got down like 2,200 area, 2,180 again, I'd strike on Google. I don't know if I want to chase it here though, because we are, up 12% from the lows here.
Man,
so
don't all
I
these charts look the same?
They all look the same.
Look at this.
It's my fault. It's the ARB's fault, right? We all just arbitrage this stuff. Q's going up, I'm buying Google. Q's going down, I'm selling short Google. I mean, it's just, but
it's
in the
like
trading portfolio, you're in and out. You're just going against it all. So
but it's all coming off the turn now.
Yeah.
Like, look at this, coming off the turn in Apple. Oh, we're doing okay. And then we kind of die again, right? Microsoft, I mean, obviously that had the news, but the same thing. Turn off the low, and then, well, I'm starting to look tired. Google, turn off the low. Oh, I don't know what to do. And then Amazon's a little different. It had that really nice pre-split run, but wow, you guys got to know what I'm looking at here in Amazon. I don't have to point it out to you, but and then Tesla's been its own beast. I mean, got hit on Friday, but just think about the perspective on Friday. 75 points. Was it down 75 on the bad
down
tweet?
a lot. Yeah, I think
Yeah.
you're right, Joel. It closed.
Yeah,
Yeah, 775. It went down 72 points on Friday.
On the bad
10%.
tweet. Yep. And then
On the email.
up. Yeah. And then up. So not the desired a negative net of 50 points. So not good.
Well, you think, and just think about just bringing in the common sense to it all.
Yeah.
So you can kind of see where this has come from. Leaked email. Oh, a little bit worried about some stuff from Musk. He watched the stock fall 75 points. So he put some tweets out there to try to inspire some confidence back in, but it's already, the damage was done. So is this just damage control by Musk? I think so. And I think the market would think so too. It is rallying on it, but you're not going to get those 70 points right back because the email still got out there and they are worried a little bit about, I think the economy going forward and whatever else was said. I forget already from the email, but we talked about it on Friday.
Yeah.
So, I mean, you bounce back a little bit of it. Could you get 730, 735? But I'm not touching Tesla here at this point, not after that leaked email. So we'll see. It wouldn't surprise me if it gives it back. Again, overall market matters, though. It's a nice day for the market, and Tesla's so much of the S&P that it moves. You can stick the SPY. We've said this before. Stick the SPY chart on Tesla, throw a beta on it at 1.5 or 2, I guess 2, and you're kind of the same.
Yeah. How do you feel about the market this week, Dennis? I mean,
it was right on the fence. It's a very tough market. It's shown some pretty good resilience in the face of some Microsoft, disappointment, even though that was FX headwinds. I'm really on the fence here. I think, as a trader, I'm just kind of neutral right now. I'm trying to just, it was oversold. The market was oversold. We even said that to May 12th, which are the bottom in the growth stocks. They were just so oversold. We've had the bounce now. So now it's like, okay, well, we're not oversold anymore. And we're kind of overbought a little bit in the last couple of weeks. But, do we have, the possibility to go up a little bit more, consolidate here for a few days, which we've done on the S&P and move higher? that's a potential too. I mean, we try to get up to 420, we can't get up there, but we aren't going down either. So
Exactly.
it's holding up well. So far, so good for the S&P. But again, longer term, I'm still cautious. So short term as a trader, I'm neutral. Longer term, I put a little bit of money to work. Yes, I said on Friday that I did buy the one stock I bought, which I talked about forever, was Scott's Miracle Grow. Again, you know me, I'm like, nice dividend, lower PE,
SMG.
stock significantly off of it. It looks like a Denny stock.
I need them to come take care of my lawn, so.
Well, that's it. Yeah. And I'm also thinking I got my landscaping coming in. I'm going to be buying some Scott's Miracle Grow probably for my lawn. So I might as well
need some weed and feed, man. Send it to the house.
Yeah, that's it's I know a lot of my buddies that are technicians, and they would love that chart. That would be like, oh my god, that thing is so bullish. But just the general market comment, we did put the double bottom in last week. That low was protected on Friday, and then when I did my write up for Premarket Prep Plus, I mean, you didn't have a good feeling after Friday, right? It was not, we were way up in the pre-market, we sold off, we settled near, the lower end of the session. But then when I do that, when I try and write that rep, I'm like, well, what did we do this week? Right? Last week we gained 250 handles. That's a good week. All right. This week we gave back 45 of it. So are we going to go out? Is it going to be the same kind of rally like we had in 21? Where it just go up, 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 or it was just a little breather. And the fact that that we did, that we held the double bottom higher low on Friday, I'm like, the name of the article was damage control, and that's basically what happened on Friday. We did not fall apart. Now, what happens with this positive reaction today, we'll see. But we take out the high from last week. I mean, then you really have to turn bullish, and we got that up on the chart there.
But here is the chat, and the chat is making the point that I've been making for a long time: is CPIs on Friday.
Yeah, it's exactly.
You're going to see this market probably gyrate and basically nobody really making a huge call to be buying stocks like crazy or selling stocks like crazy until we get that CPI data. That CPI data comes in soft. You'll see a rip-roaring rally right through S&P 420. If that CPI data comes in same or hot, it's going to get ugly. It's going to be, a binary event, and it's going to be important. Now, I would say coming in line is not good enough because we want to see improvement. Yep. We want to see that now that we've raised rates, that inflation is starting to show like it's getting in check, so the Fed can calm down. Until we see the Fed start calming down, it's hard to get bullish stocks. So if I see that CPI data looking good, I'll be trying to grab stocks in a hurry.
And they'll be like,
I just want to give the forecast there. The forecast for inflation is a steep rise of 0.7 in May through the annual pace holding 8.3. The one number that's going to be definitely on watch is the core inflation, as that's seen to be slowing down to a 5.9 reading. We'll see how that kind of works there. I think another important thing is kind of watching the consumer sentiment this week, right? There's a lot of consumer stocks still reporting here. I'll throw up the calendar just so you guys can see some of these names. Definitely going to be watching to see what happens. We'll get UNFI. We'll be getting kind of later in the week. We got some Campbell's, we got Cracker Barrel, Rev, Dave Buster's, Academy. I'm going to be looking to see if we get continued looks of that demand destruction, right? I mean, that's one thing that we've been talking about here. We've been slowly seeing it with the inflation, and that's a good sign that inflation could be topping out. Is that what you guys are continuing to see out there? The demand inflation kind of destruction coming from it. I'm starting to see a little bit out there.
We've seen it in the automotive. We talked about those sales year over year being just imploding, at Honda, Toyota, Mazda. I mean, this is ugly for obviously a lot of those automotive companies. That's low-hanging fruit. It was obvious. It's why we talked about it. It's why I sold my General Motors, why I sold my Ford. It's why, and I still love the EV aspect of that, but just short term, they got major issues of trying to pass this forward. I talk about it, with my wife on the weekend. Let's just drive by the car lots and look at the prices again, because I drive by the lot. I don't know why they even advertise these prices. Take stickers out of the window, because it makes me not even want to pull into your lot when I see a $95,000 Canadian F-150. I just can't even believe it. They will not be able to pass through those costs. They need to. It's not their fault. Steel costs are up. Input costs are up. All the parts costs are up. They can't get certain parts. I mean, I get why the prices are what they are, but the consumer is not accepting of that. And people they don't absolutely need to have new cars. And the roaring, expansion of an economic growth that we've had, from 2010 to 2020, let's have a new car. It's going well. That's the first thing you cut out. It starts going not that well, cut out new cars.
People are mentioning in the chat oil, and I
that too.
I
Everything
swear,
working
I
against
swear,
them.
I ran. I don't know where I was going, and I went somewhere, and I looked at the gas at the local gas station, and I think it was like $5.12. And then I went, or something like that. And then literally, I don't know if I went to the store or the pool or something. I came back, same day I drive by, and it's like 5.16.
Huh.
I mean, what are they having someone up there just staying in the stand and posting the changes on that. So I mean that's a huge component. But
Yeah. I mean, they have platforms that work together, right? So like if one gas station goes up, they see the other, it alerts them that they need to raise their price. That's the way it works. I used to run a couple gas stations, so I know that they have those platform and algorithms that tell them when to raise the price. So let's just say I'm sure they're checking it multiple times a day. And multiple times a day, they're probably having to raise the price.
yeah.
So.
Have you ever had a sandwich from a gas station?
I mean, I ran 7-Elevens, Joel, so
Oh,
we won't get into all those
They're
sandwiches.
not bad, Joel. You just have to have lower expectations. Everything's about expectations. You go
$5
into like
pizzas, man.
7-Eleven, you're like, okay,
Slurpees,
I'm
bro.
gonna eat
You
this
can't go
sandwich. It's not
wrong.
gonna be very good, but I'll eat it. And you're like, it's not bad. I went golfing this weekend. Actually, not even mini golfing, real golfing. But
so did I.
So they didn't have. It was a smaller course, and they had them going in there for lunch. And I didn't want to wait for a burger. And they said it's a pre-made sandwiches. So I'm sitting there, I'm like, all right, it's gonna suck, but it's gonna fill me up. And I was like, you know what? This actually wasn't even
But
that
that's a
bad,
golf
this pre-made sandwich.
course.
It's all about expectations.
That's a golf course.
I'll
That's a
tell you
golf
what.
course.
The
I'll tell you
7-Eleven
what.
I've ate lots of times
Well,
too.
I'll just
It's
tell you,
not bad.
the first time that I saw someone do it was Rob McLister and I went to Chicago on some business, and we drove back. He stopped for gas in one of those places, and he got, what are they called, taquitos and a hot dog, and I was just like, I couldn't believe he ate that. But the only time I had a gas station sandwich is when, and this was back during COVID, when we decided that we were going to, go get Emily out of Virginia. And it was like the world was about to lock down. And I was just like, okay, I need a sandwich. And we stopped at the gas station, got a sandwich, and I lived from it. But
I lived.
Eh,
They're
you
not
lived.
bad.
oh, this is a
lived.
bad
They're not
tangent.
man.
Oh,
You
bad
lived.
tangent.
I'll tell you what. I'm waiting
Rein us
for
in, Mitch.
Wawa. Wawa to go public. When Wawa goes public, you guys call me because I'm gonna be there. I'm gonna be the first buyer. Let's go into our ratings of the day. I want to talk a little bit of ratings. Yes, I know, guys. We barely ever cover ratings. I'm gonna start trying to get to them here. Let's go into the Morgan Stanley upgrade here of CrowdStrike here. They upgraded it to overweight and raised their price target to 215 here. So CrowdStrike getting a little bit of a raise today. What are you guys seeing in the cyberspace?
I was hawking this with somebody on Premarket Prep Plus, or it was at the close show, and they had earnings at the end of last week, right?
Yes.
And I looked at it, and I'm like, how can you ignore this support level here?
Yep.
And I'm like, and it was hanging like 162, 163. I'm like, I don't know where it's going, but I know where, if it goes, I want out of it. Right. And that was like 158, 159. You had the four low, and it wasn't, not a retracement of any nature, but it was just, there was such a firm buyer in there. I'm like, hey, where's your, there's your support. Now I hate when you move up on these ratings and float it up to 169.20. There's really no daily levels in here. I mean, I wouldn't worry about 168 or 169. Your next daily high to contend with is 178.89. So maybe not today, but that's what I'd be looking at
The
if this
analysts looked
rally is
at the
going to
chart.
continue.
They look at the charts. We know they do. Pachter tries to time them too. We know the analysts look at the chart, and they're
Yep.
looking at the chart in this case here, Joel. They're seeing the support that you're seeing. This was a good timed upgrade. And I don't know necessarily. I like fading the analysts a lot, but in this case, I don't think I'd fade it.
Nope, I would
The
not
earnings
either.
are fine.
Yeah.
It's still cybersecurity, which isn't going away, and it's been hugging the 160. So like, as long as it's holding that 158, 160, I think you're going with it. Not necessarily chasing, but again, I think you're going with it. So I kind of like this upgrade.
I've been talked and I haven't pulled the trigger on it yet, but I've been talked into a cybersecurity stock.
Uh-oh.
What?
S.
Okay.
Sentinel-1.
Who's
Yep.
talking to that? Sean?
Yep.
The UDAW.
Yeah.
Well,
he's been talking. He's been talking to me about it since 40. So I haven't done it.
There you
now
go.
halfway,
That's how
so
you
yeah.
do it. You wait for a 50% retracement and you jump on it, baby.
Valuation scares me on all of these things. I do get that the story is still intact, but also one thing about the cybersecurity stocks is the valuation of most of these companies is still nosebleed. That's why they're not touching my longer term portfolio. But as trades, you can trade anything. I would say your S Sentinel-1, as long as it holds Thursday's low 23.10, you're okay. I wouldn't want to see it start breaking down below Thursday's low because that's kind of a slippery slope down to 20. So as long as it's holding that low, I'd say you could take a shot here. So I don't mind the shot.
What I like about listening to your analysis and and Sean and other the other great people that we have on the show. Did you know I had Gene come on us on Friday and bid farewell to Spencer, Gene
That's
Munster,
nice.
and he actually
nice.
interviewed him. It was really good. But what I like listening, like you talk about like the valuation, right, and how it scares you. Where Sean analyzes it is like where it's going, like how much money they can make, right? And so
forward-looking.
that is a predictor of future
sure.
valuation. So I, the dichotomy of the way, listening to you guys, it just helps me with, the overall, you're like, I can't buy it because of the valuation. And Sean's like, this thing's going to grow into its value. This thing's cheap.
And that's a different story. And that's because Sean is doing obviously a lot more research on specific sectors.
Exactly.
He's just tech stocks. He's looking. And when Sean says something like it can grow into it and he's got projections, sometimes when I'm doing long-term analysis, I try to look out to the projections and you try to get a feel. I mean, you would have never owned Amazon if you thought it couldn't grow into its valuation. But, you got Pachter, who was on the show. Pachter helped me on Amazon too, buying it, and not being short, because people were like, when Amazon was like $300, going back to, obviously pre-split, but going back to like 7-8 years ago, Pachter was on this show and saying, look, yeah, it looks like it's trading 100 times earnings, but one, it's going to grow into that valuation, and two, is they're spending so much money in R&D and dumping it back into the company. They could make more money right now if they wanted to, but they're just concerned with growing the top line and they're not concerned with the bottom line right now. And Pachter explained that on our show like 7 years ago. We've been doing this Premarket Prep show a long time, and totally talked me into Amazon. And I'm like, okay, well, this makes a hell of a lot more sense to me now. So to the point, the same thing. If they have the numbers that they can eventually grow into that valuation, that's okay. But you got to find a path. And a lot of times the path is hopeful, wishful thinking that they can go into grow in the valuation. And it's not like concrete. It's not there. In the case of Amazon, it was absolutely there. Number one retailer, 10% of all retail sales, running through Amazon. Sentinel-1, I've not done the homework on that, so I won't argue with Sean. I have no idea. But I do trust Sean's work. So when he says it grows in the valuation, it's worth researching to see if it can actually do that.
All right, let's go towards another area being focused today. Upgrade here by Raymond James on Spotify Technologies to outperform, announcing a $150 price target. I think this is definitely one to keep on watch as you've seen stocks come on down here. Where's the valuation kind of meet where investors will start stepping on in? I think that's the real question here in Spotify.
I'm staying away from this one. So as much as I like cybersecurity stocks and I have a Spotify account, I'm paying them money, the valuation on this one is still nosebleed. And this, you just wonder, like, could there be another thing that comes out that's a little sexier, does it in a little different way? I mean, all they are is bringing you all your songs, and it's awesome.
Did
I enjoy the
sorry to
Spotify.
jump in here. Did Elon sell some Twitter?
Oh crap!
Oh,
Bring it up.
let's take a look here. Let
Good
me go
call,
ahead.
Joel. We'll go over there right now. Twitter's just falling here right now, hard.
Yeah, I see an active stake being out there. I got to get through it here, but
yeah, we'll get this right now.
I don't think he bought any more. If he bought any more, it'd be
well, it's probably commentary here. So let's see if there's been a comment or something. We're going to get this for you in a second, but good call, Joel. We'll just try and Mitch is doing homework.
Yeah,
I'm doing homework. Do the quick technical. In 10 seconds in the background, me and Mitch will hunt this down. What's the
oh man, I mean, you're pulling back here. So if you thought, just technically, if you thought you want to be in this for the merge and it's going through, you had about a $6 moves. That brings you back to
there you go.
38 and a half. Yep. Go ahead.
I've got it here too. Elon Musk in a letter delivered, he asks for more information on the fake accounts, on the spam.
Yeah, they're pretty much saying that they're refusing Mr. Musk's data request. So he's requesting certain data, and they're not providing
more information. So this is this concern, because this is the concerns that he brought up when it was 50, that there's a lot of fake accounts that there's a lot more fake accounts than what Twitter is saying. They were saying 7-8%, and he thinks the number is a lot higher, and that's why he wants a price adjustment. He's still asking for that information. So despite him saying, he still wants to buy Twitter, now if he's still asking for this information, it makes you think he wants a price reduction, which he may get. He may get it.
I don't agree with a lot of stuff that he says and does, and I do agree with a lot, but he is so correct on this. I mean, I think I picked up like 4 or 5 Twitter followers over the weekend. They're fake. I can tell they're fake.
Joel thinks everybody's a fake follower.
It's
like every single follower.
Oh my gosh! Oh,
he's Musk.
There's first of all, Dennis, do you get a lot of pretty girls that are like stock market experts? They're pretty girls.
Those always try.
They're stock market experts. They're moms, and they're expert options traders.
Of course.
Yeah. Yeah, and that's all they do is parent and trade options. And
that's the new trend, bro. You didn't know that? You didn't know that, Joel? That's the new trend. You pop out babies and you stock trade options.
Or you could look and just like every once in a while, and a lot of the fake people follow like the same people. I'll see this fake one and I'm like, oh, this person must listen to the boom boom boom, and I'll go look, and they follow me, and they follow Dennis, and they used to follow Spencer, and they follow Mitch, and then they follow
maybe they listen to the pre-market
Elon.
They follow me.
Then they follow like Elon Musk.
Then
they follow Elon Musk, and then they follow Warren Buffett, and then then they have their algorithms. And they're like, Joel said this, but Dennis said this, and they put it into the computer, and they're like, okay, let's buy Amazon today. This is based on our Twitter log. Yeah. So that is what's going on with Twitter.
Essentially, just repeatedly requests since May 9th to facilitate his evaluation of spam and fake accounts on the company's platform. That's read right through it on the active form there. And so pretty much, I mean, he's trying everything and anything, if possible, to maybe back out this deal or get a price reduction.
Yep.
Let's just be honest.
He has buyer's remorse.
It shows like it. He has buyer's remorse. He has FOMO, but the opposite way.
Yeah.
he has SELMO.
He's definitely got buyer's remorse. I mean, the 54. I don't think there's a chance. I don't think there's any chance unless they try to get him right there and hold him to it. I think he's going to get a price reduction. I think it could go like 45. I think it could go 42. That's why to buy it here at $40 now, $37.50. It's the risk reward. I think if the deal goes through, I don't think he's getting 54. I think it's going to be like a 45 or something. So you got 8 points upside. That deal doesn't go through. Again, you've got to look at where is Snapchat now? Where is Pinterest now? Where after that, I think Twitter is under $30. So it's tough from a risk reward perspective. As you get down to the 35, it starts to look a little more attractive. Then you start thinking 10 points up, maybe 6-7 points down. but I just think, with everything we're reading here, he does not want to buy. He does not want to buy this company at 54.20.
You know what? And here's another thing too. I mean, well, I'm not going to say that anything happens nefarious on Wall Street, right? But not only is he kind of hung out to dry in Twitter, he's kind of hung out to dry in Tesla too, because he has his. And I know it's down at 540, where so basically they got it. We know he has a huge position in Twitter, right? If the deal doesn't go through, he's going to have to do something with it. And he has a huge position in Tesla. And he, obviously, doesn't ever need to, sell a share again. And he's a billionaire beyond billionaires. But man, I would never show my hand in 2 stocks to Wall Street for any reason whatsoever. So what's he going to do? What if you have to get out of this Twitter stock? One thing buying it, going up, seeing it go up, but hey, the Roach Motel, man, they'll let you in, but they won't let you out. I'm so glad. What again, Sean talked about, hey, should we get back in this? Deal goes through 43, 44, 45. I'm like, no, I don't want to be involved in this. And so that's it. But guys, I just realized it's 9:00 there. So I'm going to hop off. And I got the Brentster coming on Premarket Prep Plus. And
that's at premarketprep.com.
Yep, I'll check it with you guys later on. Go get them.
All right, guys. We're gonna start wrapping on up here. I'll read
Mitch,
the last
smooth
comments
show
here.
today. Spencer, we miss you if you're listening. Spencer, we're gonna miss you forever. Mitch, you did a great job. I mean, Mitch is gonna be running with us here for a while here now. We're lucky to have Mitch. Like a lot of people don't realize. When Spencer, Joel, you see me and you see Spencer and you see Joel every single day. Mitch is right there in the background, feeding us topics, feeding us information, coaching the chat, monitoring the chat. He has been so involved with the premarketprep.com show for years here now. So, he's just, being front and center in it now, but he's always been there. So that's why it's going to be a smooth transition. Great job today, Mitch.
Yeah, I hope you guys enjoy it. And like we said, definitely tune in onto the Musk comments there. It's going to be definitely fun, but hit the like button. I hope you guys enjoyed today's show. I'm going to do my best to definitely bring in the value. That's what it's all about here on Premarket Prep, the best morning show for stocks out there. So you guys do us a favor, smash the thumbs on up. That's how you guys support us, and we support you guys on out there by bringing you guys the interviews that you want to see, the comments and the topics. And of course, if you guys got some feedback for Premarket Prep, throw it in the chat down below or hit the comments after the show, and then we'll definitely go ahead and make the show better. I hope that Spencer enjoyed watching us. I'm sure he watched this at least. So definitely give it a thumbs on up for Spencer too. We're going to keep building here, right here on Benzinga. Up next, you guys got some live trading with ZUNAID, Ryan, and I. I'll see you guys on over there. Let's go make some money, and let's keep it going right here on Benzinga. Let's go, guys. Let's go.